Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 8th of January. We are on a Tuesday. Gap up on the open, little bit of selling after that, followed by a rally and closing pretty much about where the day started for the most part. Fairly uneventful day in the market. You did see the real estate sector break out of its most recent swing high. So there was a little bit of buying going on over there, as we will see as we work into it. And good afternoon, everybody. As always, great to see you. Hello, Andy. Hope everybody had a great day trading as the bulls, for another day, right? At least for another day, they got the victory. So here you can kind of see, you guys probably can't see this. I'm going to move that so I don't see it. So here you see the S&P 500 on a 15-minute chart. We had that gap up on the open. The market is, fairly optimistic right now. We'll see, again, we haven't really had any significant mental challenges just yet, I don't think, at least. But regardless of my opinion, we did see a nice gap. We did see selling immediately after that. It pretty much gapped on the open and sellers did step in relatively quickly. S&P kind of working back to its previous little support level, of course, on the intraday level. As you can kind of see here, off of that, just kind of a slow, steady grind on our way back up, closing near the tops of the day. So as we kind of take a look at the daily chart, and of course, as often the case in the market that we currently find ourselves in, most of the indexes pretty much, and the sectors too, for that matter, look very, very similar. But certainly a solid day for the bulls. Hello, Whitney. Hello, Adib. Good to see you guys as always. As you can kind of see here on the S&P, taking out another, carrying that momentum now 3 days in a row. We are working closer and closer into that 2,600, which is kind of the area I'm looking at. Numerically wise, it might be a little bit closer to 2,620. Maybe we'll just call it a range in that 26 to 2,620 ballpark as that next, level of support, which of course was a pretty big breakdown, but we still have, a little bit of room, another 40, 50 points from where we currently are until we work into that old support zone. Who knows how it's going to play out, but, as you just kind of look at the chart, there's really no logical reason why it can't push into that area. At least in my opinion, there isn't. And hey, Thiago, good to see you, my friend. Saw you in the halftime report the other day, very briefly. It's always good to see you. For sure. Good to see all you guys. Thiago's just one of the first people, I really kind of got to know, as I kind of got into the hanging out in YouTube thing. So it's always good to see him. I don't know how much I've got figured out yet, but hey, new year, right? So over in the NASDAQ, continuing that upward momentum again, gap on the open, very, back and forth day after some initial selling, grinding our way back up to the top, approaching, that 66, which again is not a specific area. We're going to have to look at these kind of as zones more than specific numbers. I'm going to gravitate towards kind of those big round numbers. That's where I'm going to be looking, but really I will be treating it more like a zone than 66 or 26. But we're able to carry on that momentum. Thank you, Thiago. I enjoy doing it. Like I've told you guys many times before. This is always, well, not always, but for over a decade, this has kind of been my process, and this is how I always kind of start my preparation for tomorrow, if you will. So it benefits me too, kind of talking it out loud, I think. So, but I hope you guys are getting value out of, kind of applying this sort of philosophy to your daily trading routines. And good afternoon, Abel. Did you catch me in the halftime report? I don't know if I caught you before you left regarding your question about those charts over in the market skyline. It looks like you have to be signed into TradingView to save. Again, always take my advice when it comes to technical stuff with a grain of salt. But it looks like I use the TradingView charting software personally, and when I'm logged in, I don't have a problem. But when I'm not logged in, I wasn't able to save them. So that might be something that you can kind of take a look at, Abel. if you were interested in. But as far as what I can gather, it looks like it's logged in versus not logged in through the trading view charts, which of course are the charts that are used over in the market skyline over on Tackle, or our site over on Tackle Trading. So hopefully that can at least give you some clarity or something to take a closer look at. So yeah, I think so. And again, I don't want to say for certain because I'm already there, but that is what I saw on my own, Abel, is, because I'm, logged in, I wasn't having, problems because it was recognized me as me, if you will. So instead of, just a guy looking at the charts, so to speak. So, but again, you don't have to do that. But if that's something you want to take a closer look at, that probably would help get those lines saved if you wanted to do that. As you look at the Dow Jones, kind of shifting back into our indexes, again, same song and dance, 24, kind of the number that we're looking for. We're getting awfully close. And so as we approach these areas, we probably shouldn't be surprised if folks take it as an opportunity to do some profit taking, right? Again, we don't know the future. No one ever does, but we are getting closer and closer. We have a little room to go in all of our indexes, but we're getting awfully close to testing some support levels, old support levels as some resistance. So, keep an eye on that as you move forward, of course. And then lastly, over in the Russell, it's continued to show very nice movement, getting back through, clearly that 14 area. Yesterday, I think we closed at 1405, closing here at 1426 today. Really not a significant challenge until about 1450. That's going to put us at our 50-period moving average, our old support zone, which was, a big breakdown for us. So that'll be something to keep an eye on. So our markets are approaching, fairly big numbers, from a resistance point of view, at least in my opinion, they are. So keep an eye on all of that as you move forward. But again, nice solid upward movement. And as we've seen in our markets, as we've seen in so many of our sectors, and we can even add the real estate sector to that list today, things have broke those little swing resistance levels. So we are still seeing some buy signals going on across a lot of areas within the market right now, including the material sector, continuing that nice upward movement that we've really experienced since we took out that resistance zone. We're approaching the 50-period moving average, an old support level, getting fairly close, but we're still a ways away from that, downward trend line that you can kind of see here. So we still have a little bit of room over there. Interestingly, I was just, when I was kind of going through everything on the 15-minute time frame on the materials sector, much like the market gapped up on the open, pulled back, and kind of chugged away the rest of the day, kind of putting a little bit of a triple top formation on that 15-minute time period, which to me would suggest if we can, continue this momentum into tomorrow's open, not really great reason why we can't probably work, into a little bit higher, but we're going to start to see lots of challenges, whether it's the 50, the old support, there's, we're kind of running out of space in a lot of these areas. That's the downside of filling space up, right? We have to, work into challenges eventually. So over in the energy sector, we did see crude get awfully close to 50 today. It was very, very, very close. And of course, I think that probably how it responds will probably impact how our energy sector looks as a whole. We are getting closer and closer to that 62 price point, which of course, was a major bottoming out point for this ETF, last year. So definitely a price area that we want to keep an eye on. But I think, and again, you don't have to agree with me, but I think probably how crude responds at 50. Do sellers come in? Does it break? And do buyers look at that as a buying opportunity? I would call it a bullish signal if it broke above 50. I'm just one trader, of course, but that's how I would view that. I think that will play a lot into the energy sector. But again, you have to appreciate that run that we have seen, in the energy sector. No doubt, I thought 43 was going to be important. A lot of us did. A lot of us had our targets there. I know several of you guys that I talked to had your targets at 43 when crude initially broke 50. We were all kind of looking at that area. We all kind of thought it was a support level worth paying attention to. Maybe we didn't think enough about it. I know it's a profit-taking zone. I wasn't really looking at it as a buy zone, and I don't regret that. Well, hindsight, who doesn't? But in real time, I don't regret that. But certainly come a nice bounce off of that, no doubt, and it's definitely impacted our energy sector for sure. Over in financials, relatively weak on the day. Technically, we closed up like 0.08. So we closed in the green, but was kind of one of the weaker areas, on an intraday level. Nothing really changed substantially with our overall trend, but didn't see, we really sold off and had a hard time working back towards those, the higher end of the day, which we saw so many of the other sectors able to do. I don't really think I'm going to put too much stock into that. There are some ugly charts, shaping up for potential retracements in the sector, but you can pretty much say the same thing about any sector that you look at, if you're being honest with yourself, I think. So as long as we kind of hold this, 24, which is this, old price point, it's about where this fairly steep trend line is. I don't expect this trend line to be able to, hold long term that we've developed. I'm going to continue to look at 24 and 25 as the numbers. And as long as we hold, that steep trend line, that 24, overall, the resistance area that I would be most concerned about is still going to be that 25. So again, it's probably going to go with the market. If the market starts selling off tomorrow, I'm willing to bet that financials are going to be selling off with it. But if we can continue to work into those resistance zones, or those old support, new resistance zones, probably a better way to put it, there still, in my mind, is some room to operate in the financial sector. So over in industrials, we're kind of starting to work into those challenges, right? We kind of saw Doji kind of set up at this old breakout zone from here on the sector here today. Pretty clear Doji, a lot of back and forth, and indecision, of course, is what we see when we see those Dojis. Certainly an area that is probably worth monitoring. 68 probably is that next significant price point, or approximately 68, I think, on the ETF. So if we are able to push through on this again, we're going to want to be picky with things, right? A lot of our bearish retracements, which we're going to get the opportunity to trade some bearish retracements eventually, maybe not this week, maybe not tomorrow necessarily, but there will be some sellers that step into the market, which is going to open up the door for potential bearish retracement opportunities. Be picky is how I will always look at things. These things that have broke above, individual stocks, since we're just looking at the industrial sector, in the individual, the sector, it has kind of made that higher low and that higher high. Now, maybe it's not the hugest deal in the world, but it did happen, right? I'm going to try to find stocks that kind of just rallied with the market, or if you will, or breakdowns that didn't rally up and just kind of hung around on support. I'm not going to try to, I hate the game where you're playing, we have the characteristics of an upward trend, higher highs and higher lows, but we also have characteristics of a downward trend, lower highs and lower lows. Which side wins? I mean, always going to lean to the side of who's been in control the longest, but I'd rather find things that are showing relative weakness on their own versus kind of look basically just like the overall sector, if that makes sense. So as you're kind of going through your watch list in the days to come, because that retracement will happen, whether we trade it or not, whether we should trade it or not, we are going to get it. Maybe it will just be a 3-day, retracement, and then we'll carry on back up. We don't know, but we will see some selling at some point in the market. So you would think, but it certainly has been an impressive run. Since the day after Christmas. Funny how Christmas Eve, the stock market was ending, and then it's been pretty much rainbows and sunshine, except for one whipsaw day ever since then. So over in the technology sector, we were finally able to cleanly close above that previous swing. We've really kind of not been able to do that while the NASDAQ already did it, as we've talked the last couple of days, trading days, finally able to break through that here today. Keep an eye on the NASDAQ. That will probably have a big part to that. But, I think you have to call that a little bit of a bullish signal. We now have technically put in a higher low and a higher high. We still have a lot of overhead, right? A lot of overhead to go. Not too far away is going to be our first challenge. This was a fairly, big number, in my opinion. A nice bounce here, nice break here. So in this 63.40 range, going to be that kind of first level. And that's what stocks are going to have to start dealing with in the very near future. Whether the bears end up winning or the bulls end up winning, we're going to be facing lots of levels of resistance and pretty much across the board in the very, very near future because we've kind of rallied up. And of course, that's a good thing, but we are having to face that. Over in the staples, continuing on, of course, we saw that break on Friday. We're able to close above it, that previous swing high again here on Monday. Nice upward movement, definitely one of the stronger areas. I'm still, don't like it. This is what concerns me personally. this major price point, significant shift, nice bounce, and then a significant break. And while I understand if people are trading or looking at least at some bullish opportunities in this sector, for me, 52 is just going to be an annoyance until it's one way or the other figured out. And so, from a technical point of view, we still have a little bit of room to work until we get to that challenge. For me, I look at that as a fairly significant price point. I know that not everyone is going to agree with me there, and that is certainly fine. But I will be paying very close attention to that. And I'm going to need to see how we respond to that before I get too excited. But again, if we break that, what are we rewarded with? A flat 200 period moving average, not the biggest deal in the world, but you'd rather not have to work through it, right? The longer term trend line. So again, overhead is going to be what we're seeing in the very near future if the bulls can, maintain control. Over in utilities, a good solid day. We are still trading with that in that same general trading range. Another 10% down day for PCG, I think. So the sector overall pretty solid movement here today. But I do think, again, this is one of those, I could see a bullish argument that you're betting on this longer term sideways action holding. And of course, we're in a shorter term sideways within this longer term sideways. Really, I think as long as we're between here, this is probably not a great directional area across the board to trade. Might be an interesting, cash flow area, bull puts or covered calls or things like that. But really, we're starting to see it develop. And as we've seen, utilities, it can go sideways for a while, right? Not to say that it will. If I knew that for sure, I would tell you and we'd go make a bunch of cash flow trades on it. But it certainly, has a history of going sideways for extended periods of time. So, if we're looking at this 3 weeks from now, we're still in this range, I'm not going to be terribly surprised. But with that said, again, much like we talked the last few days, we do know where resistance is. We do know where support is. We are seeing those buyers come off of this price point. So, keep an eye on those two areas. We are getting close. If we carry, this momentum into tomorrow, we might be testing resistance as early as tomorrow if we continue to see upward movement. So a good strong day today, but I don't think really it has changed anything in my mind, technically speaking. Over with healthcare, very similar. It tried to break, and it kind of got the benefit of the open, of the market open today. Doesn't seem to have a whole lot of momentum behind it just yet. I would not be comfortable saying that this is a bullish break. And I think from a technical point of view, you can say, yes, Frank, your opinion is your own and you're certainly entitled to it. We have, closed a little bit above it. I think if you're looking at it from a buy side mechanic, you want to make sure you're taking out that high of the day at the very, very least. I don't know, there are some interesting bull candidates over there, but there's just as many and maybe more interesting bearish breakdown candidates in healthcare, to me at least. I'm not loving the way it's been responding. It just doesn't seem like it's benefited from the rally in the market on the same level that so many other areas have. And that gives me, a little cause for concern, because I'm not going to be crazy, right? I'm never going to be overly, aggressive one way or the other regardless. And so I have the opportunity to be picky. I'm going to be, right? And I don't have to like healthcare. I will love you again, healthcare, I promise. Just not yet. But we did close above that price point. We are seeing some of those signs. We have made that higher low. We did close above resistance. We were able to close back above that 20. It is very mixed. It is very mixed. And I don't trust it quite yet personally, Abel, because it's been too all or nothing lately. I need to see that next wave of selling before I'm willing to say, hey, we're back in a stock pickers market. Now, that is what I would like to see personally. I'm not a huge fan of I call them all or nothing markets, where pretty much everything's red or everything's green. They're okay. We can work with them. But I prefer when, we're trading bullish in utilities and healthcare, and bearish in real estate and discretionary or whatever it might be. I prefer the stock pickers type of market myself. I need to see that next wave of selling before I'm going to feel comfortable saying that we're in it. But you're absolutely right. We are seeing a little bit more mixed bag right now across the board, which is certainly something I've noticed as well, Abel, no doubt. So you're certainly not alone there. Nice day for the discretionary sector as well, up another percent plus here on the day. Dojing closing above the 50. We're awfully close to this trend line. We really are getting very close to it, and that should present a bit of a challenge. We'll come into a weekly to maybe better illustrate that point. If we're just looking at this on a weekly, it actually looks pretty well behaved, right? That's awesome, Boost. Love to hear that. Pretty consistent channel that it's been working in. Certainly, we've seen no, sell signals or anything like that, in my mind at least, just yet. But I think this is a price point worth monitoring. I think this next, retracement here is going to be really interesting. I can certainly see it as a bearish retracement opportunity. But if we see, a little bit of selling, putting in a higher low, and then taking out this high, which would kind of line up nicely with that trend line, might actually present some, interesting longer term buy signals if it's able to play out that way. So do keep an eye around 104. We're close enough that, again, I can only speak for myself, but if I'm a bull owning this ETF right now, I'm on an awfully tight leash, with it being closing in on that trend line after a nice bullish run to the upside, at least from a shorter term perspective. But another solid day over there. Now, real estate, as of course yesterday kind of tested that resistance level only to falter, was able to take that out here today, getting a nice clean close above that, putting in that same type of a pattern where we've got those higher lows and those higher highs that have developed. Again, much like so many areas within the market, there's going to be a lot of overhead, but a pretty solid signal. We've seen the signal in a lot of areas. Real estate was a little, slower than the others, but that's not necessarily a bad thing, right? It's just a thing. I have to respect that close above that old resistance today. Interestingly, we have the falling 20, which we want to keep an eye on because we know that can act as a resistance catalyst, if you will. But really, we do have some room to work, into that 32 range, going to kind of put us at this old support little mini floor that developed right south of our 200 period, flat 200 period moving average. These are some weird moving averages on real estate, a flat 200 and a flat 50 that you don't see that very often. That is odd looking. So at least to me, that's odd looking. So there is a little bit of room for some of these real estate stocks to go before they challenge their resistance levels. But again, we are still in that downward trend from a little bit of a longer point of view. But at the same token, if you wanted to look at real estate more from a sideways point of view, I think you probably could. It's just very choppy and messy. As in my opinion, at least, but again, my opinion is always my own. I'm always entitled to it. I always like to start with what's happening. Hey, we did break resistance. What I think about it, that's my own business, but I always want to respect what price action is doing because it doesn't care about my opinion at all, right? So unfortunately, I wish it would listen to me. And lastly, over in communication services, another solid day, probably largely on the back of Facebook, which of course had a solid open here today, gapping up above that 50 period moving average and pretty much closing well above it. So pretty solid day in Facebook, which of course Facebook and Google make up a very large percentage of the market cap within this ETF for sure. But you have to respect that we were able to break and close that 50. Now this long-term trend line is what I'm eyeballing. As I've said before, these guys have never broke that trend in their short life, and that doesn't mean they can't or never will. It just means I'm going to be paying awfully close attention to that that trend line for sure until they prove to me that they can actually break resistance. I'm going to assume that they cannot, and that will be the general approach that I will always take, not just right now in the communication services sector, but you have to respect that movement. And a close above the 50 is a little bit of a close above the 50. We do have a little bit of room. But if you ever find yourself trading this actual ETF and not individual stocks within the sector, I would definitely keep an eye on Google and Facebook. Like I said, they make up a very large percentage of the total weight of this ETF. And so as a very general rule, they are going to have a very big impact on the price action of this ETF. You have Facebook, and then both shares, both classes of the Google shares, GOOG and GOOGL. So if you do find yourself trading this ETF ever, might be worth your time to keep an eye on those guys too, because they have such a large influence over here on the communication services. So as you can kind of see, I mean, really a nice carry through day. Again, now, several days into it, now we are still dealing with lots of overhead. But at the same time, and again, we're kind of mixed, and Abel hit it right on the head. We are seeing mixed signals. We have some short-term buy signals. Real estate, like it or not, it did break resistance. That is a short-term buy signal. Whether it's enough for you to take a trade, that's a completely different story, right? But it is a signal for us. We still have a lot of overhead all across the board. Want to be keeping an eye on those major points, of course, on the indexes for sure. But a very interesting market that we find ourselves in right now for sure. And because we're seeing things simmer down a little bit, again, the next wave of selling I need to see before I'm willing to trust anything before I'm willing to trust anything, and the VIX included. VIX continues to work down as we continue to see buyers step in. Let's see what the spike looks like when sellers step in, right? Whether it's, that's a great bearish opportunity or just some short-term profit taking. I want to see how the seller or the buyers respond to that, how the VIX responds to that. So Abel, we'll take a peek here in just a second. Always interested in looking at a new stock. And good afternoon to you, Shirley, as well. So we did see some downward movement over in the VIX. But like I said, for me at least, I want to see that next volley of selling before I'm willing to say we're in a stock picker's market. We are lowering volatility. It's easy for volatility to drift down while there's really just been upward movement, right? So always want to see that challenge. Over in the dollar, really we're able to hold that support line. And go again, we kind of looked at it yesterday. It was really kind of two tails, right? One of those tails maybe wouldn't have meant a whole lot. We saw two of the same price point. That was able to prop us up for at least another day, seeing some buying off of that. Still closing below 96. So I still don't think that this is in a very great bullish spot. But I do think that we have, okay, now we know that this is a pretty significant level of support. If this is to falter, there should be a little more downward movement within the dollar in the shorter term. If we rally up off of this, maybe my view, I was kind of looking at the 96, 97.50 areas as sideways. Maybe I was just off a little bit. I should have been thinking about 95.70 instead of 96, right? And that would be okay too. So, I still think probably the best way to look at this until we get some clarity there is we are sideways. I still do lean a little to the bearish side, and if on that on the dollar, because of the slowing pattern that we've seen here after being kind of upward sideways. We've been downward sideways. We're kind of hanging at that last level of support, but at least for another day, that support was able to hold up for us. More profit taking, but not really anything earth-shattering in our metals. Gold continues to kind of pop around that 1280 on an intraday level, but we really kind of continue to just be hanging around. Trend still very much intact. We know we've got that big level of resistance, whether you're looking at it as a big round number of 1300 or all of this, old resistance, old support stuff that it has, experienced at that price point. It needed to take a break, right? As much as any of us bulls never wanted to take a break, it needs to. Nothing's going to go straight up forever, right? Just like it's not going to go straight down. So I don't think really anything has changed. I think 1280 and 1260 are areas that we can kind of look for in the over in gold right now. But again, profit taking, that makes a lot of sense, especially after testing 13 a couple days ago. Really similar situation over in silver, maybe not quite as pretty of a chart because gold's really just nice bounce off of 1280 on the intraday. Silver a little more downward movement on the intraday, not really dealing with any particular levels. But again, nothing really in my mind to see here. We are kind of in that consolidation / pullback / profit taking phase, in my eyes at least, in looking at the silver market, much like the gold. When we get some new buy signals, whenever they happen, I will personally expect it to take another run at $16, and that will be kind of what I'll be looking for. Just don't think it's here just yet. And honestly, I would rather it be like next week when it happens, if I could make it be that. So another day, another rangy type of day over in natural gas. We're really starting to develop into and again, it's short term, but with natural gas, I mean, it's been so wild that anything that develops is worth talking a little bit about. We've really started to develop a range now for several trading days in a row. Taking a look at the hourly, just to kind of put that into a little more perspective, we are kind of seeing that floor develop. I think you could argue, and I'm not saying that I would do this, but I think you could argue that whichever side that we ultimately break could be a trading opportunity, at least from a short-term perspective. Now, I think we need, just honestly, I think it needs to do this for another week. I need to see it not gap like a crazy person on next week's open before I get no matter what signals I were to get tomorrow, theoretically, I wouldn't be interested in, unless I was just hanging out looking at natural gas as a day trader, which is probably not going to be happening. I need to see it, have a reasonable, weekend open. So because it has been as gappy as can be, no doubt. But I do think it's interesting. We're starting to develop. If we can drag this into a little longer, that might be asking a little too much. Yeah, I probably is. This is natural gas, right? But you never know. Never hurts to ask. If we can drag this out, go sideways for a little longer, maybe a break either way could be a tradable signal that maybe even us as a swing trader could at least consider taking. We'll have to see. I'm not going to hold my breath. And thank you, Thiago. Always appreciate that. Yeah, and likes always help. I always beg for them at the end, Thiago. So they're always helpful. Just YouTube things. It's always nice to know that it's helpful. But I appreciate you looking out for me, my friend. Always appreciated. And lastly, and maybe, let's not even say maybe, probably most interestingly, right? Over on crude, we've worked back into that 50. It's taken a while, but it's been a little bit of a smoother run than maybe, well, at least I thought. I didn't really have a whole lot of hope back here that we were going to get to 50. We were able to work very, very close. 49.95, I believe, is the high point of this candle here today. Now, interestingly, we haven't seen any signals just yet. If you go in and look at an hourly, and we did see, as it approached, we did see some selling off, and maybe it's a little easier to see this if I scrunch our time frame down just a little bit more. Our first approach to 50, we did see some pretty quick profit taking, but we were able to rally back into it. I wasn't going to be surprised if it hit 50 and really sold, quickly. Because again, I can only think like I would think, right? If I have a bullish play on crude, I'm out of here, as it approaches 50. I'm a wimp. Everyone knows it, so I always, think, of course, we always think like ourselves, first and foremost. So I do appreciate the fact that, profit taking didn't really, pick up, and so we don't have those sell signals yet. So while I think the price is very interesting, right or wrong, from a potential bearish point of view, we need to see some sell signals develop first. Aggressively speaking, you're probably realistically, and this is why I think you're going to probably need to develop, but I think you're probably realistically, much like we looked at yesterday, breaking way down here to get some sell signals, on a shorter term basis. I would hope that things, develop over the next couple of trading days. If we are going to get that bearish opportunity, I'd like this a little bit closer to 50 than 48.50 if at all possible. So it'll be really interesting. On the other side of things, I mean, like I said before, I think you have to call it a buy signal if it breaks above 50. Now, I'm leaning, bearish. I'm looking at it from that overall perspective, but, I've been wrong many times. And just because I'm looking at it doesn't mean it can't break the other way. And doesn't mean necessarily that, we can or will or have to trade it right then. But I do think you can look at a break of 50 as a little bit of a bullish signal. And really, with our next level, we've got, again, we want to talk about layers of resistance on top of us. Crude is definitely the poster child for that. But not really a lot until we work into 54.50 or so, if we can break 50. Now, I don't want to assume that that's going to be an easy thing to do. And like I said, I would prefer that it shows me sell signals at that price, but we'll have to see how it plays out. But very interesting, regardless of what we want to do or don't want to do or will ultimately end up doing. I think it's very should be important to follow it and see how it responds off of this $50 mark. I know a lot of traders, on both sides, as potential bulls or potential bears are looking at that number. So an awesome boost. So self-taught trader, awesome. Well, welcome. We're glad to have you you with us. Always fun to meet new and exciting traders. Love this stuff. Never get tired of talking trading, which is a good thing because I'm always talking trading. So it was who was your stock again? Abel, it was CVE. Is that correct? I think it was CVE. And I can scroll up here and make sure that I am right there. Yeah, it was CVE. So yeah, kind of working into some trend lines. So I'm guessing much like the overall energy sector, Abel, kind of looking at this as a potential bearish retracement type of candidate. Is that correct? Yeah, and I would understand that. So no doubt about that. It looks like we're kind of working in trend line. I think it might be a little easier to look at a weekly chart, and I always will do this. Kind of start longer term and work my way down. Still working into a downward trend. On the weekly chart, much like everything else. Doing some dojing, did break the 50. All things being equal, I would have preferred that it not closed above the 50, but that's not necessarily a deal breaker for me. I would just prefer that it didn't, is all. Of course, much like everything else we've, in the energy sector as a whole, I don't think we've seen any, sell signals develop. We know we are kind of extended. We know crude's testing 50. We know the overall trends in most, if not all of the S&P energy stocks are on the downward side of things. So perfectly reasonable candidate. There's going to be, and to a large extent, all of our energy stocks are going to look very similar to this. If we go into just some of the top holdings in the energy ETF, for example, we're going to see a very similar situation. We don't have necessarily the doji. We're not necessarily going to be at or below or above the 50, but we're going to have that same general type of run for sure. So we'll certainly, whoever we end up working with, if we do work to the bearish side within that sector, we have to wait for our signal for sure. We're going to have to, and probably the best way there's probably two ways to think about, picking, in my opinion. Number one, obviously the signal. Well, that goes without saying, right? That's not part of it because none of us should make a trade if we don't get the signal to get in, right? So number one is going to be our risk to reward. Some of these stocks are going to look like they're going to have better risk to rewards, even if I'm cash flowing them, right? Doing out of the money bear calls or something like that. I still want to be looking at things that have the most room to go from resistance to support, right? And so that will be a consideration, and of course, too, who hasn't broke these resistance levels? And so I'm going to be kind of looking at things, SLB just as an example, and this is just a quick view of them. They haven't really shown really anything. They're really, to me, going with the flow of the energy sector. Whereas who was it? Was it EOG? Now, was that Chevron? Somebody here kind of broke it. Yeah, Chevron. I don't love this chart, but we have seen a few more things where we've pulled back on the intraday, rallied up. So again, we're going to have to find ways to pick. So I think that is a perfectly reasonable approach to take to that, Abel. And I think these guys do kind of line up with where everything else is within the overall sector for sure. Again, you don't need me to tell you, I've yet to see any sell signals. So again, as you're kind of working through whatever your considerations are, maybe you prefer lower price stocks. CV is definitely lower price. That's not a bad thing necessarily, as long as you're comfortable with it. But that's kind of the approach that I would take. But yeah, I wouldn't be buying them. If we see some downward movement in the next couple of days, for whatever it's worth, the Able, I wouldn't be wanting to be on the other side of that trade. So for whatever that is worth to you. And then Boom's got STM. Let's take a quick peek at them here, and then I'll let you guys get out of here. Over on ST Microelectronics. So not too familiar with these guys. Looks like they're a semiconductor, a little too gappy for my taste personally, Boost. These are things that I would feel I wouldn't feel comfortable with the gappy nature. I'm guessing these guys are located or headquartered, overseas, not here in the U.S. And so whenever I see things that are gappy, I immediately kind of say, yeah, I'm not interested in. Again, that's just me personally. You don't have to agree with that. But from a purely technical point of view, kind of interesting looking chart where we had this pretty clean breakdown. You'll have to forgive me, Boost, as you get to know me, you'll know that I cannot ever draw a straight line the first time. But we had that, clean break. And again, I don't love the gappy nature of this, but we've kind of worked back into that. I'd like to see how that's going to respond. I would be identifying that old breakout point as a pretty good challenge of resistance. And nice. So yeah, I would be watching that price point. And one process that I'll always go through, no matter whether I'm trading bullish or bearish, is always kind of go in and identify those levels. So as you can kind of see when you look at my charts, I have a million lines on them. It's simply because I think those are important price points, and those are areas that I want to kind of draw my attention to, draw my eyes to, so I can kind of look and see where things at. For me, these guys have some work to do before they can get on the bullish side of things, right? This is going to be a challenge, but like we saw in the market, if we can pull back and create that higher low and then come back and break, that resistance level, then we start to see that shifting in momentum. And at least for me, that's how I kind of always look at things. So I'd watch this floor. In my opinion, this should be an important price point. If we can push back through it, that would clearly be a good signal for an owner of the stock. If we struggled at that price point, my personal expectations would be that it's probably going to at least come back to test support down here. So that would be how I would be viewing these guys here. So, but welcome. We're just glad to have you with us. All right, guys. Well, that will do it for our market recap for today. But as always, it's always interesting, right? It's always interesting. I think Abel really hit it on its head. It looks like the market is trying to simmer down. We are seeing a little bit more. Hey, there's some bearish opportunities. I found RCL, for example, on the intraday. I didn't check them before I hopped on with you guys. But they were kind of doging right at the 50-day moving average. So some interesting bearish opportunities, but you're also seeing some, interesting bullish opportunities out there too. And I'm hoping that that's going to be what we kind of develop into. I don't think I'm comfortable just yet saying I trust that that's what we're in. So again, I need to see that next wave of selling when those sell signals develop, and they will. It's just a matter of when and where, right? How does the market respond? Are we right back into sell like maniacs? Shouldn't surprise us. That's what's been happening, right? Or do we kind of, sell off for a little bit, buy or step back in and kind of go into these very short term, but new developing upward movements that we're seeing, right? So it should be an interesting go around. So yeah, old match. I liked, was it ECL too? Or no, it was who the heck was it? It was, who the heck was it in that list? It started with an E. And darn it, I know I have. Oh, it's EQT. EQT. I like these guys, especially if crude breaks out. These guys are an exploration and production company, for whatever that's worth. But they're kind of showing that I'm a breakout type of person, so hanging at a pretty major level of resistance. So there are some interesting candidates out there. Whether you like match like Able or EQT, or you find other things, there are candidates, and that is something that we weren't really able to say a couple weeks ago, right? Unless we were bottom feeding. Well, hey, if this, how much lower can it go, right? That type of stuff. So it should be interesting, no doubt. But yeah, I'm always interested in. You had X-Ray breakout a couple of days ago as well. Another, they're a healthcare company, as their X-Ray ticker symbol would suggest. Did see a little bit of profit taking. It'd be interesting if they pull back, test this old breakout point as support. That would be interesting development for sure. So definitely some opportunities on both sides. There really are. Make sure you're of course following your rules, following your money management rules, keeping your portfolio designed ways that you're comfortable with. But we're in a good market. Again, I would love this to be the way the market wants to behave for a while. I'm tired of an all or nothing market myself. I'll deal with it because I have to, right? And I don't hate that type of a market, but I'm kind of like you. It sounds like, Abe, I like stock picker markets better. So, all right, ladies and gentlemen. Well, as always, thank you so much for your time. Always appreciate you hanging in there with me. If you're new around here, be sure to subscribe to the channel and hit that notification bell. And be sure to follow us over at Tackle Trading on Twitter as well. And if you've never checked us out before, head on over to our website at tackletrading.com. Sign up for a free trial membership. See what you think. I think you'll enjoy your time there. We have a lot of great traders over there. Team getting together each and every day. So If you enjoy the market recap, as Thiago said, it's always appreciated and helpful if you give it a thumbs up. So thank you in advance for that. With that, ladies and gentlemen, get out of here. Happy trading, and I will see you all tomorrow.